Well, good morning, everyone. Welcome to our Friday morning trading session, the end of another work week. Hopefully we can pick up a couple decent trades today before heading into the weekend. So we're looking here at the NASDAQ market, and the market, let's take a look here at the overnight. You can see we made a rather interesting move last night. The market drifting lower, bottoming out, coming right back pretty much to where they finished yesterday's session, yesterday's close, somewhere around the 48.10, 48.12 mark, and this morning we're opening around 48.15, so not really an opening gap or anything of that nature to speak of. Unlike the other day, that last couple days actually, where we had huge opening gaps. What's interesting is that very often after a strong rally day, we'll encounter a day where the trading is going to be a little bit quieter. So we'll see whether that holds true today or not. Okay, I'm going to give them a few moments here to settle in. Looks like we have a retest of the high pre-market. So we have our test of the extreme and a possible failure. This may lead to a trend change signal. I thought I saw something. Oh yes, here on the Hawk, we just had a first micro-macro cross signal print. We're only a minute or two into the session. If you wanted, you could certainly, put a single order on here. The structuring this trade, though, is going to be a little bit more difficult. I think you pretty much need to leave your stops above that swing high to make this trade fly. We're getting a little bit of a bear flag type formation going on here. All right, so I'm going to take a look at taking this. I'm going to try to run this out because it's only a single. You can see I'm taking a bit of a chance by entering on the hash mark or near the hash mark instead of on the other side of this little channel line that I've drawn. And we'll see whether or not I get any follow through on that. So far, so good. All right, I'm going to take this trade to break even now. No, I don't want that. Let's get that up a little bit. I guess I should have previewed my stops before I actually engage them. It's a good habit, actually. Preview your stops so you can see where it's at. Come on, get me out of this swing. No, you stinkers. I'm going to take a run at my stops now. This is the problem, of course, when you try to run out a trade versus going all in, all out. All in, all out, I would have been able to at least grab my profit target. All right, so what started as an attempt to move the market lower since reversed on itself, and it looks as though the bulls are going to take a stab at things. Wow, they're not giving me a chance here. The only opportunity we had to get into this recent little uptick was this green bar sell signal that failed. So the green bar sell, remember you have the option to buy it or sell it. You could have set up for the failure, covered below the low. Okay, now we're coming in with the first micro macro cross. Oh my gosh, I've got it covered all the way down there. This is another one where I think I would attempt to put a runner in play. Could be getting a cloud cross over here on the Raptor. All right, here comes the cloud crossover signal now on the Raptor. We just have the warning dot. We don't have the complete signal yet. So. And that warning dot has since disappeared. All right. Okay, so here we are, 5 minutes later, trying the first micro macro cross on the hawk higher. Coincidentally, our first micro-macro cross is also a 4-arrow consolidation, so you could see this pattern a couple of ways. Wow, they were so bullish through here. Now they're kind of dragging their feet a little bit. Come on, let's go. I'd like to get at least a couple of bars in my favor. There we go. All right, I may go back to the parabolic. The parabolic and the super trend and the ATR, they're all more or less in the same neighborhood right now. Let's see if we can catch a bit of a break here and ride out this swing. I think not, but you never know. Stranger things have happened. All right, so we're tracking pretty good here. Where's my next support and resistance line? 48.30. That's going to be primary resistance. You can see we took a pretty solid bounce here off primary support. That hesitation we were experiencing is right here at the median line. So 48.33 quarters, essentially 48.31 or 48.30 if you're looking to be a little bit more cautious. I'll allow the parabolics, I think, to try to take me out. But that would be my target, around the 48.30 area. right, so here we go. We're just shy of 48.30. So much for a sideways market. I was fairly certain after yesterday's rather dramatic decline, we were going to be in for a rather quiet session. All right, here we go. Come on, buyers, hold that line. I need Ray Burke in the room. I need him to push. There we go. Come on, take out that 48.30 area. You can see that's exactly where we're stumbling right now, right at that primary resistance line. There we go. We're just about to touch it. We're technically two ticks short of the primary resistance. Of course, you should never trade your support and resistance lines that precisely. You know, you can see here the market fudged the primary support by, looks like about 4 or 5 ticks. That does not invalidate this line. When the market came back, honored it one more time. It's a shame the Falcon didn't produce a trend change signal through here. You can see that it was trying, it was attempting to. You can see the tails on these bars. That's the market trying to give you this downswing portion. It came late here, or a little bit late on the Falcon. This is actually the same time we got our first micro macro cross signal on the Hawk and the 4-arrow consolidation that kind of overlapped here. My only regret on this trade is that I didn't take 2 contracts, because I would be looking to exit one and run out another, because there's a very good possibility, given this strong uptrend here this morning, that we may see the market move further still. Where's the next line at? 48.45 half. That is a very realistic profit objective. All right, so it looks like I just got tagged on that little bit of a reversal. So we're flat on our Hawk. How did we do on that move anyhow? Oh, that's all right. Soybeans retracing now to the hard edge on the eagle. After a little bit of a sideways session yesterday, we've got the market moving back now to the hard edge. And from there, we can probably anticipate a reaction and maybe a trend change here on the Falcon. You can see our trend line has already changed color. So we've got the up portion, looking for the sellers to fight it back and then for the market to come back with a buy signal. We may see a little bit of a retrace here as well. I don't think it's going to be too terribly serious. It does appear as though the buyers have full control of the marketplace right now, so I would be looking for buying opportunities. I don't think I'd be getting too keen on shorting, at least not in a serious way. Not yet. If we take a look here at the eagle, we might get a bird's eye view, if you excuse the pun. So let's see where the market has come from. So yesterday's open, if we kind of shoot a trend line across there somewhere. So from yesterday's open to yesterday's close, oh, it looks like we have breached that. And that's more or less where the market found some support this morning. Interesting. But given this very strong run up, and the market apparently paying off to the long side, that would definitely be my preference today. And, you know, you can see this is an instance where, actually I had this discussion just the other day with one of our DTS owners about, you know, should you take profit on target? Should you have a runner in play? Most times, you should take profit on target. If you're trading a small account, you should take profit on target. However, that first signal of the day, or the first half hour of trading, what's known as opening range, is very often the time of the day you're going to see the biggest moves occur. Actually, the same is true for the first hour. That's why I focus primarily on the morning session, because really, if you take a look at a chart, especially if you take a look at a time-based chart, it becomes a lot more obvious. Well, here, why don't we do that? Why don't I build a time-based chart here? We'll look at the NASDAQ on, let's say, a 5-minute chart. Where are you, NASDAQ? Right there. Okay, so here's a 5-minute chart. 1 second, let me change the data series here. Here we go. Regular trading hours. And we'll throw in the breaks. Okay. So here's yesterday's trading, and rather dramatic decline, right? When did it occur? Well, it occurred from the open till about 7:40. So Eastern time, that's 10:40. And then for the rest of the session, the market goes sideways until once again it breaks out around 11:40, an hour or so, hour and a half before the close. Right? So not much going on during the rest of the day. Not that there weren't opportunities here. There's certainly enough opportunities to take a few scalps, take a few swings. All right, let's see what happened the day before. The market drops out of the open and then a big rally up. And this quit at the top of the hour at 8:15, 11:15 Eastern. Well, actually, this was a little bit more active, wasn't it? Because the afternoon did have a pretty dramatic decline. All right, so this day is a little bit the exception. I remember this day. That was a real roller coaster of a day. All right, so here we go, a little bit quiet, and then finally, about a half hour into the session, the market falls off, and that again is around 8 a.m., 11 Eastern, and then we kind of go in a bit of a sideways drift. Now, once more, it's not that there aren't opportunities to be had here, but you can just see, generally speaking, when the market makes its move, it's usually at the beginning of the day or very often at the end of the day. Oh, I remember this day. Wicked move lower out of the open, wicked move higher, another tremendous move lower. And this day, again, one of those exceptional days where it's ranging very well throughout the entire day. But I think you get my point. If you're going to put a runner in play, it's a good time to try it out of the open or during that first half hour or hour of trading. All right, so crude oil a little bit on the decline here this morning. Let's take a look at the crude oil market here on the Falcon. And after yesterday's modest rally, they turned on their heels, gave us a trend change signal, a couple of trend line touches, and we've been on the slide ever since. So not much going on for crude oil at the moment. It looks as though we're going to drift back into the hard edge now of our trading band here on the Eagle and the cloud on the Raptor. We are producing a couple of buy signals here on the Hawk. We have our our macro pullback signals. Now we're producing a red bar buy. Tony said gold made a nice rally. And gold's a great market to watch as well. Alright, so we're just kind of on hold here at the moment. Got a red bar buy signal that has failed. Getting a rather substantial retrace here. Sellers are pushing hard. Much stronger than I anticipated. I didn't think the sellers had it in them. But I guess, given yesterday's big move lower, they're just not going to walk away here because the buyers managed to rally the market 30 points. All right, so here we are now at the hard edge. Okay, we've got a couple things going on here. We've got a first micro-macro cross lower, which is a high probability signal. It's against the trend, so if you're going to take it, I would probably suggest going all in, all out on target. I don't know if I would try to run that one out too far. We've got a possible late filter entry signal here, or pardon me, we do now have the late filter entry signal to short on the Falcon. Like the Hawk signal, I would go all in, all out, maybe take advantage of a second push on the entry, now that we know where the limit is of the market. You got to cover it above the high, and again, take your profit, I think, when you have it. But for me, I kind of have this loose rule of thumb. If the market seems to be paying off in one direction, I'm going to try to stay with that direction. And since it seems to be paying off to the long side, I'm going to give preference to buy signals. Now, that's not to say those high probability signals aren't going to work out. You know, we know from experience that they have a high probability of success. It's just that I do get a little bit nervous anytime I'm expected to take a counter trend signal. And we do have conflicting trends here. The immediate short-term trend for today is up, but the longer-term trend over the last few days is definitely down. I'm debating the second push signal here on the Eagle. but it looks like I can ignore it now. We're getting a green warning dot. Soybeans on the rally now. We did get that trend change signal right here. I wonder if I can still get into that. Darn it, I'm going to be too late. But there's a possible signal right there on the soybean market that we were watching just a moment ago. I'm watching to see what's going on with this hard edge. Ooh, now we are getting that follow through. Stephen's got a question here about the mini Dow. Hold on one second while I fire up a mini Dow chart. We're going to take a look at that. This uptrend might be breaking down. Okay, Stephen is asking now. I'm going to assume Stephen's question is on the hawk. No, I don't think it is. Oh, it might be the eagle. All right, so Stephen writes, "Hello, Eric. maybe you can go over this. I saw this AM that the YM was stronger than the NQ. I passed along at 637. I think that must be it right there. I passed another long at 644, probably this one right here. So then I take the long at 655 and it turns against me and stops me out. Why does this happen all the time? Thanks, Stephen. Okay, so why does the market do that? Right? It gives us a buy signal, we pass. It gives us a buy signal, we pass. We decide to get in, and the market turns on its heels and goes against us. A couple of things. First off, the best signals are usually going to be the most uncomfortable signals. I've shared this with you before. A trading friend of mine always used to say the big money is on the surprise side. You know, when you're looking at a chart, in fact, we were discussing this just the other day because I got caught flat-footed. And this is going to happen to you. Like, I've been doing this for a pretty long time now, and it still happens to me. So don't be too frustrated with yourselves when it happens to you. I'm trying to roll back here into yesterday's chart. Yesterday, of course, that huge move lower. I got the right day. 27, yes. All right, so the market made this really dramatic move lower right out of the open. The first micro-macro cross signal, I think I took that and the market retreated against me and I got tagged at break even or for $10 profit or something silly like that. And I believe I ignored this next 4-arrow consolidation / macro pullback and this 4-arrow consolidation macro pullback right down here. I know for certain that I ignored. Sorry. Let's get back there. I know for certain I ignored this one right here. 4-arrow consolidation, macro pullback, pretty much textbook. Why did I not take that signal? Because I convinced myself that this market was long in the tooth, that it needs to reverse and head higher. Right? I wasn't the only one thinking that. How do I know that? Because the market continued another big move lower after stopping out everybody who was buying early here, and you can see there was some early buying on the break. They tried to buy it up, the market just slammed them and stopped everybody out again. So by the time the trade looks comfortable to you, it's probably too late. The hook has been set and the market's getting ready to turn on its heels. So that's thing number one. If you're uncomfortable about the trade, that's probably a good sign. That doesn't mean you're ever going to get used to it, but there comes a point where you just have to trust your signal. And the only way you're going to trust your signal is by actually doing it. Now, if you're well funded, go ahead, trade single contracts, take the trade, and record what happens. Very important that you record what happens, because I think at the end of the day, when you get back and you start going over your journal, and believe me, I don't spend a lot of time reading my journal, but just the fact of writing it down imprints it on my memory, and I begin to recognize that certain things happen over and over again. And you're going to gain some confidence in that signal. And the fact that you're uncomfortable about the signal, like doggone it, I was looking for the buy opportunity here in the Eagle and I just missed it. And the fact that you're uncomfortable about the signal is going to be secondary. So here we had a buy signal. I would have waited for the ATR to turn over. So that essentially makes this bar right here our signal bar. My stops, I would probably go about halfway. So that's kind of what I'd be looking at right now. Okay, so that's the first thing. You're you're going to feel uncomfortable about taking the signal because by the time it looks bullish to you, the market's getting ready to go bearish. Um, the second thing is you've got to gain confidence in your signal. You've got to take it when the signal prints, regardless of how you feel about it. Third, the market has a tendency to top out or bottom out at the end of opening range. We'll take a look here at the Raptor. That might be a little bit more evident. So you've got to watch the top of the hour. This has bit me for a lot of years before I clued into it. That when you get to the top of the hour, the market may well establish the extreme of the day, and if it doesn't do it right at the top of the hour, it's going to do it either probably anywhere from 5 to 10 minutes after. So today, I think we turned a few minutes early. We turned about 9 minutes early, and that became the high of the session. Let's take a look at yesterday. Oh, sorry, it's not printing. But we can draw it in. Oh, no, it did print. Okay. So here's the top of the hour, and you can see we put in a little bit of a bottom, and look at how the market is starting to fight it. Now, it doesn't mean that just because the market has established its opening range, the market cannot break out from there. That should be obvious. We're well below opening range. We produce a cloud crossover signal. Does that mean I shouldn't take a cloud crossover signal? No, just the opposite. We've already breached that opening range. This market has room to move now. Let's go back another day. Okay, very tight opening range. But again, here it is, 7 o'clock, or it turned a little early. It turned about 15, 20 minutes early. But even so, this is 7 o'clock right here. Yeah, okay, this is a little closer. So the market comes down. Here it is, the top of the hour, 7 a.m. Pacific, 10 a.m. Eastern. And what happens? The market turns. So that's the third thing to bear in mind, is that once you're getting to the top of the hour, be a little leery of any buy signals that come your way. I used to despise that signal that came about quarter to the hour. That first 15 minutes of trading, we would get what should be a solid signal, and then it would fall apart. So I know it's frustrating. You're in good company. But yeah, you just got to get yourself to that point where you can take that signal when it prints. And if you're uncomfortable with it, you just got to fight through it, unfortunately. Mark says, possible late filter entry signal on the Falcon. Let's take a look here. Yes, sir, you picked that one out pretty well. We've got the trend line. Oh, darn it, trend line just flipped over. Got a little bit of a sideways market, still favoring the buyers. Now note it's gone out of sync here for a couple of bars. As you become more sophisticated with this late filter entry signal, you're going to find these little exceptions where the market goes out of sync for a bar, maybe two, but it's not enough to negate the signal. these types of exceptions occur when the market seems to be trending better. Right now we're in a little bit of a sideways skid. Like I said, I'm still favoring the buyers ever so slightly. Let's see, am I going to get another signal here? Yeah, the hawk, it might produce something. The eagle might come out here with another signal. Is the raptor giving me anything yet? No, I got a hard edge bounce. No double pullback or anything yet. We do have a bit of a sideways range. If you wanted to use your bracket order, you could bracket above and below to sell or buy. All right, here we go. There's the raptor signal. I may try to get in on this raptor. This is essentially a double pullback near the top end of the trading range. I'm going to go in light, though. I don't want to go in too heavy on this. The more predictable entry is actually above this high, the opening range high, which is still a long ways away. All right, so we got a fill. And here's an instance where, we're kind of mid-session. I should be going all in, all out. I do just have the single in play. Come on, let's go. Very considerable resistance at this 48.25 area. Taking a bit of a chance entering on the breakout because, of course, most breakouts don't. Most breakouts have a tendency to turn on themselves. So we had 1, 2, 3 reactions. We are making higher lows, and it is a double pullback signal. So again, I'm trying to play on the probability of the signal itself. Maybe get back to that 48.35 area that we were hunting for earlier. Tony's long on gold. Give me a second here. I'll pull up a gold chart. See what Tony's up to. All right, I'm just gonna. All right, I'll take this trade to break even. Might be a little premature. Come on, get up there. I did hit the break-even trigger, which means my target, profit target, is just above here a little bit. 3/4 of the way to the profit target. Don't hit me. Be nice. Get up there. Come on. There you go. Come on, just give me a little breathing room here, you stinkers. They want to go higher, they just don't know it yet. We're getting back. There is a fair amount of resistance here at this 48.30, 48.32, 48.35. That whole region, there was a big cluster of selling, not only this morning, but yesterday as well, if you remember that. So it's a very influential price level. And if we see a break of that, our next resistance line, I think, was 48.44 or 45. That is a very plausible target for us. All right, so I got a little bit of room there. Let's go take a look at Tony's trade here. I'm going to take a look at it here on the Hawk. I think this might be what Tony was getting into. Tony's long on gold from 1273.8. So it looks like this macro pullback. Target 1275.3. So just shy of the profit objective. So Tony looking just a little further there for a profit-taking opportunity in gold. And you're right, gold did make a nice strong rally right out of, well, let's see, they opened back here somewhere, I think. Kind of an active morning for gold, but another market that seems decidedly bullish today. Hooray. Hooray for us. Okay, next stop, 48. Our soybean trade also working out rather nicely so far. You're at your high probability target. Soybeans is a market that I do tend to double the profit objective on, however, just because it's one of these markets that tends to have decent follow through. So there's an opportunity there, and soybeans still perking away. Doggone it, why didn't I take a runner, or I took a runner on this one, why did I not, why did I not take my normal 2 contracts? Oh, you see, I do the same stuff you guys do, and girls. We're all on the same boat here. Yeah, you see, Stephen? Stephen writes, and thank you for sharing this, Stephen, honest. You guys should never be shy about, posting comments or something. Because, hey, this is the internet. Nobody knows who you are, right? You don't have to be embarrassed. It's not like you're doing this in front of your friends and family, or some of you might be. But, well, certainly friends. We're all friends here. But you shouldn't be shy about posting stuff because that's the way you're going to learn. Stephen writes, so I was going to go long at 729 on the NQ, but I chickened out and look at that nice trade. Ugh. Why didn't you go long, Stephen? Because it was uncomfortable, right? You felt uncomfortable about the trade. That, I told you, if you got a pit in your stomach and you don't feel good about the trade, that's probably a good sign. I know it's weird, but when you start to feel good about the trade, that's the time you should be backing off. The reason we took this trade, of course, is because it's a double pullback signal here on the Raptor. It's one of our high probability signals. And once again, sometimes you just have to force yourself and start small. Start small. Go in with a single on those uncomfortable trades. Give yourself a safety net. Make sure you have a stop that you're comfortable with. But don't strangle the trade. That's equally as important. Because if you keep your stop too tight and the market makes a little pullback against you, well, you're not even going to have a chance to get to your profit objective. And then, excuse me, then give yourself a safety net on the day. A max amount that you're prepared to lose that day, whatever it happens to be. It should be an amount that certainly is not going to devastate your trading capital, but it's an amount that you would be okay with. If you happen to hit your max loss on the session, even after taking high probability signals, go into sim mode and continue to trade and learn. But then go back and figure out why your high probability trades did not work out. Dollars to donuts, you probably had your stops too tight, or you rolled your stops too quickly. Like I actually caught a bit of a lucky break here when the market was looking back and I was already at break even. I knew in my gut I should have left my stop back here at the parabolic. And I got lucky. I really did. All the market had to do was go one tick further against me, and I too would have been tagged. But yeah, you're going to be uncomfortable taking some of these high probability setups because they're not going to look like a high probability setup. And honestly, folks, the only way you're going to get through that is to take the trade. You gotta take the trade. If you take a stinker, hey, nobody in the world is going to know it but you. Right? Here I've got everybody in the trading room watching me when I stink the joint out. But even so, I'll never meet most of you. So there's small comfort in that. The only one who I really have to answer to is the missus, and she doesn't ask me that often. she'll give me the what do they call that? I forget the exact term to it, but she'll ask, was it a good day? Yeah, it was a good day. Was it? And if I mumble a little bit, she'll know not to poke. But honestly, that's the only way you're going to get around this is you have to learn to trust the probabilities. Learn to be a good loser. I heard this term just the other day, and I think it is so apt. Where we're going to take losing trades. It comes with the territory. But you have to learn to be a good loser. So what does that mean? All right, well, let's say we took this long position, and I forget where my initial stop was. I think it was, if it wasn't down here, it should be down here. So now the trade goes in our favor a little bit, so I could, at this point, I can roll my stop up. Right? So even if this trade reverses at this point and comes down and stops me out, I have taken a good loss. How is that a good loss? Well, because my initial stop was down here, and rather than get stopped out for that much, I only got stopped out for this much. That's a good loss. And once you get good at losing, and I don't mean, you're good at losing often, but once you get good at managing your positions so that you only take a stop out when the market is truly reversing, that's going to make a big difference to your trading. Like I said, I got lucky here this morning. I wasn't prepared to leave much more on the table than that. But the good loss would have been below this swing low right here. After the breakout, leave my stops there. And if the market reverses and trades back through these lows, well, then there's a very good possibility the market will continue lower from there. That's a good loss. It's not to say, all your trades have to be winners. They're not always going to be winners. That's a fact of life as a trader. And it's something you got to come to terms with. Okay, I'll shut up now. The beauty of trading, of course, is that you can do all this in hindsight. You can roll your chart, just grab your cursor, pull it over anywhere, and then just advance your chart tick by tick by tick. And when you get a signal, and I would suggest that if you're going to do this, you go into your indicators and you turn your arrows off so you don't cheat. Because right now from this arrow, I know that the next bar, at least printed high enough to engage the hash mark. you go through your chart and you find a signal, and now it's decision time. What are you going to do? Do you feel comfortable buying that? Are you uncomfortable buying that? Is it a high probability signal? What do you do? If you can't answer this question in hindsight and then play the chart forward and say, oh, okay, that was a good decision, that was a bad decision, how in the world are you going to be able to do it when it's real time? And again, don't beat yourself up. Trading is difficult. It is a difficult profession you guys have embarked on. You have to learn to use your tools. It's like any trade, really. You have to get good with your tools. I like that analogy, huh? I'm going to mention that to Adam. You know you're going to hear that one in the future. But it's true. It's so true. Good tools don't mean you'll be a good craftsman, but a craftsman is only as good as his tools. You're not going to build a kitchen with a pocket knife. Yeah, see, there you go. Tony says, well, I'm a good loser. I just got stopped out on gold. And, you know, you'll make a note in your journal. Watch what happens after your stop out. Does gold fall off the map? What happened here? You know, why did that trade not work out? It was obviously a high probability signal. Was it just one of those things? Because you will get a losing trade from time to time. It's going to happen. Was there something you overlooked? Was there something you just flat out ignored? We traders are pretty darn good at deceiving ourselves. All right, keep going. Let's go in, Q. I'd love to see you tag that next support line, next resistance line up here. 48, 45 half. Oh, that'll be a nice run up. And I know I get on these rants, folks, and please don't think that I'm talking down to anybody, because I'm not. We're all in this boat, same boat. Okay, they're digging in a little bit now. You can tell the width of some of these bars. We actually got a wick on this particular candle, came back with a tail on the next candle, so a little bit of an inflection point here. They're kind of seesawing back and forth. Might get a little hiccup. Oh, look at that. Ran it out again. Well, Tony makes a comment here. If you never made a bad trade, you'd be on your yacht somewhere having a margarita. I got a newsflash for you. The guys on the yachts having their margaritas right now still make bad trades. They make plenty of bad trades. And I think I've shared with you folks one of my worst months, or sorry, one of my best months money-wise was one of my worst months win ratio-wise. I was only right about 40% of the time. I was wrong more often than I was right, and yet it was one of my most profitable months. Because that month I was an especially good loser. I was really good with my stops that month. And to be fair, I caught a couple of runners as well, which also helps. No, if you venture into the realm of trading, you will lose. All these market icons that we hear about, like Richard Dennis. Many of you will have heard of Richard Dennis and the famous turtle traders back in the 70s or 80s, whenever it was. How he took his $400 that he borrowed from his dad and he ran it up to 20 million or something like that. It's the stuff of trading folklore. Or Larry Williams with his $10,000 to $1 million challenge, how he won that challenge within a year, converted $10,000 into $1 million. Again, trading folklore. The stuff you don't hear, though, is that a couple years later, Richard Dennis had to halt trading because his losses were so substantial. Larry Williams, the year after he won the trading championship, lost the million trading. So, it bites the best of us. It is a very humbling profession. Very humbling. It's a constant education, I think. All right, the parabolic's getting a little bit cozy now, so they're starting to go a little bit flat. See how they had this nice progression here? Now they're going a little bit flat and sideways. That's suggestive that a top might be in. We might see a little bit of a hiccup here. 48.38 half. That would be, I could live with that. I guess I'm going to live with it whether I want it or not. But that was a good run up. And a nice way to end the session. If you're going to continue trading this afternoon, well, the market is in a bull trend. There's no question about that. I think we just need to wait for the next buying opportunity, which could be a little ways off still. I would not be surprised to see the market retest, perhaps even get back down to this 48.32 area, 48.30, where we've spent so much of today. I don't think we're going to get a full retrace into the cloud, maybe just a partial retrace. But a retrace does seem likely now that we've hit that next resistance line. Or just a couple of ticks short. So maybe a move back to 48.30 and then a possible run up again before the close. Be careful, though. It is Friday. It is a little bit crazy today. All right, gang. I will see you, oh, I guess Monday, Halloween Monday. All right. We'll talk to you then. Bye for now.